All right. Hey, everyone. So it looks like the magnificent meltdown has begun. It's not through the whole market. Financials still look okay. Healthcare still looks okay. But these things happen. That goes up, will come down. I don't know where the stocks are going to be in 5 years, but they definitely got overextended. So here's what I'm going to be watching just over the next few days to see if this sell off continues. Real important here is Apple. Okay. I mean, look at this example of support. Like, you don't need to be a trading guru or a former hedge fund trader, which are now a dime a dozen, which I kind of think is funny because I actually am a former hedge fund trader. And let me tell you, it's not as glamorous as it sounds. All right. But anyway, notice how resistance here turned into support over here around 181. Well, people sold here and they thought they were the kings when the market went down. Then it finally goes back above their price. And a lot of them are like, oh, I made a mistake. And if I can buy my shares back at the same price I sold them at, I'm going to. So when the price drops back to their selling price, there's these remorseful sellers placing buy orders. So what was resistance can convert into support if there are enough of these buy orders. So now we have to watch. Are we breaking the support? My guess is that we are. I think we're going lower. So make sure you check back and let me know if I'm wrong. You don't need to do that because I will know. But support is this large group of buyers. And if support breaks, that's just trader talk for meaning the market trades below it. And it's not just a symbolic thing. It tells us something. It tells us that the buyers or the traders and investors who created the support because they had so many buy orders out there are gone. Maybe they finished their orders, maybe they canceled their orders. Either way, they're out of the market. So when you take demand or buyers out of a market, it could set the stage for the market to move lower because when sellers come into the market, they're going to have a hard time finding buyers. There's going to be a lack of buyers. So what is this? What do the sellers need to do? Well, they probably need to offer their shares out at a discount in order to get buyers off of the sidelines. And what does that do? It forms a new downtrend. So that's Apple. I guess we'll just take a quick look at Microsoft here. This really choppy action in Microsoft, really choppy action like this tends to be bearish. And this is in the old days what they'd call the broadening formation. Notice how Microsoft, it's kind of in a nice little trend, trending up, trending down, trending down, trending up. All of a sudden, it's gone haywire. All right. This action shows a lack of leadership and it tends to be bearish. So Microsoft looks kind of bearish. Apple looks kind of bearish. If we look at Amazon, another one of the magnificent seven, I believe. Now this is falling into a gap. So this looks bearish. So the expression gaps refill. One of the reasons why we get support in the market is because you get remorseful sellers trying to buy their shares back. People sell and the price goes higher and they're like, this sucks. If it gets back to my level, I'm going to buy my shares back. So notice how what was resistance there turned into support here. It's a very common thing in markets. And in the institutional trading world, we don't care about silly things like Fibonacci or Gann theory or Elliott wave. Frankly, I think that diminishes what we do as market technicians. I consider myself an equilibrium analyst. That's what we're doing. I mean, we're looking for equilibrium. If something's in equilibrium, it trades sideways. No money to be made. If something's out of equilibrium, more supply than demand, more demand than supply. That's where we can make money. So anyway, when a market gaps up like Amazon did, meaning it closed here and it opened here the next day, it didn't trade in these price levels. So you're not going to have this phenomena of remorseful sellers trying to buy their shares back. So if the buyers come in here, if the sellers come in here, they're probably going to have to offer their things out at a pretty meaningful discount. And this could push us into a pretty rapid move lower. So this looks bearish to me. Now, NVIDIA is reporting tomorrow, and it could be your classic case of buying the rumor and selling the news. And that's what happened back here. Now, I know the price has since gone higher, but in my community here, we're mostly short-term traders, day traders or swing traders. So this is where NVIDIA reported this news that their earnings were great. And what happened? The stock went down. So this is what we call bad action. Buying the rumor, selling the news. And this maybe is a case of this. What does it mean? Well, it means when people are talking about how great it's going to be, the market goes up. That's where you buy. When the news comes out, guess what? Everyone who wanted to buy pretty much has bought already. So the market runs out of buyers. Supply and demand. The demand gets full. There's no one left to buy. In the institutional trading world, where I was for longer than I care to admit, money managers generally take positions by percentages. So they might say, okay, I got a portfolio of X many dollars. I'm going to put 5% of my money into NVIDIA. Once that position is full, well, when the news comes out, good, bad, or indifferent, it's like, hey, my position is full. I don't need to buy anymore. So that could keep, so that's what we could call bad action. If people get really bullish on something, investors go into it, and eventually when they run out of money to invest, the only way the market can go is lower. All right, so let's look at SMCI. Oh, actually, you know what? Before NVIDIA, notice where it found support today. See this blue line? Notice how it was support back here? Well, there tends to be support at levels that were support before. There are people who sold back here who, once the price goes higher, they're like, ah, damn, this sucks. If I want to buy my shares back, if it gets back to my price, I'm going to buy my shares back. This is what we just saw with Amazon. So it's not uncommon. Well, this is seller's remorse manifested in a different way. People sell and then the price goes higher, and a lot of them say, man, if I made a mistake, if it gets back to my price, I'm going to buy my shares back. So getting support at a former support level is not an uncommon thing. The real traders that really know what they're doing, the people that I used to, well, I don't want to say, but I used to be one of them. But the people I used to work with are like throwing around tens, if not hundreds of millions of dollars. And I shouldn't say throw either. We're looking at what price level is important. What's the trend? Where does this thing turn? Now, this super micro had a massive sell-off, came all the way back today, but I think it's going to go lower. So we're going to be watching the Apple support around 181. And then I think that this is another important thing to focus on. This ETF is the semiconductor industry ETF, okay? And this 196 level is important. And it's not surprising that this is where we found support. The low trade today was like a 195. All right, so less than 1% away or 0.5% away. Resistance here became support. Okay, people sold here and the price goes higher and they're like, I want to buy my shares back. And we get to support and we rebound. Why does this happen? Well, support is this large group of buyers. And sometimes the buyers sense other buyers are coming into the market and they start to get worried because if someone else is willing to pay a higher price, that's who the sellers are going to go to. So they raise the price they're willing to pay. Other traders that want to buy see this and do the same. And you end up in this bidding war that pushes the price higher. So here's what I want you to watch. Watch this 196 level in SMH. Watch the 181 level in Apple. All right. NVIDIA. We're going to watch this support level here. See? Support, found support. These are three big levels. And, if they all simultaneously break, there's going to be a meaningful move lower. If they hold, we're probably going to get a tradable rebound. So this is just really the tech sector of the market. I'll talk more about the financials and healthcare and so forth and so on tomorrow. I mean, tech looks weak to me. Healthcare and financials, they look like they're okay. Thanks a lot, everybody. I appreciate it, and I will see you soon.